Well, President Obama is kicking off his second term after his inauguration last week, and he was reelected despite a less than stellar state of the economy. But if you can recall, the days that led up to the election, third quarter data came out that reflected an economy in much better shape. Take a look. You're looking at the quarter-to-quarter growth in the year 2012, and you see in the third quarter, growth rises substantially. And these figures came out in those critical days before the election. Then in the fourth quarter, post-election, there's no growth. In fact, it's the first time the economy shrank since 2009. Well, for some, this is all too much of a coincidence and believe the Bureau of Labor Statistics manipulated the data to keep President Obama in the White House. But could this really be the case? To discuss, I'm joined now by Peter Schiff, president of Euro-Pacific Capital. Great to see you there, Peter. So this is a very strong accusation that the president manipulated economic data to win re-election. Where's the proof?
Well, I mean, it wouldn't be the first time the government manipulates data, but certainly if you look at the weakest quarter of the president's term basically occurring after he was reelected. I mean, some people might think that's too much of a coincidence, especially since you had a big increase, I think, in government spending in the third quarter that was unwound in the fourth quarter. So maybe the government had some leeway in accelerating some of those expenditures to kind of goose the GDP in the third quarter, and then we kind of equalized it in the fourth. But even if you look at the entire year of 2012, it's very, very weak GDP growth. And I actually think, talking about manipulation, I think the only reason that we had a positive number for GDP in 2012 is because the government is underreporting inflation. I think if the inflation rate were accurately reported by government statistics, I think the U.S. economy would have in fact contracted in 2012. I think it did contract. It's just that we're not being honest about it.
As you had mentioned, much of the discrepancy in growth can be attributed to military spending. It seems that there was kind of this splurging in the third quarter and then a plunge of defense spending later. Do you think that was intentional, that was a tactic that they used?
Well, it might have been, but, you know, also our trade deficit got a lot bigger, and that subtracted from GDP. That is a problem that's only going to get worse. And, you know, think about this. We've had a tax increase on everybody here in 2013. So Americans are going to be paying higher taxes. I think we're going to have larger, not smaller, budget deficits. So I think 2012 might be the high point of the Obama term. And, you know, Obama often talked about the lousy economy he inherited from Bush. Well, now he's dealing with the lousy economy he inherited from himself. And I think whoever succeeds Obama, the next president, is going to actually inherit a worse economy than he did in his first term. I think the Obama recession is going to be much worse than the Obama recovery. And, you know, the Obama recovery has been the weakest recovery ever. You can imagine how bad the recession is going to be.
That's certainly a scary thought for a lot of people that are hoping and praying that we do not have another recession like the one that we just got out of. I know you think that's debatable whether or not we got out of that. I want to ask you, though.
I don't think it'll be that. I don't think it'll be like that one. I think it's going to be worse. I think the U.S. is in worse economic shape. We dug ourselves into a bigger hole since 2008. The next crisis is going to be one where the dollar tanks and bond prices fall, and that's going to be a much bigger collapse. I think the bursting of the dollar bubble and the bond bubble has much more dire consequences for the U.S. economy than the bursting of the real estate bubble.
I want to ask you something else that kind of makes this timely, where the Obama administration can point to as a possible reasoning behind this spike and slump in the numbers that we're seeing. There was all this hype surrounding sequestration, these across-the-board government cuts, and many government agencies were tightening their belts, preparing for this. So is that an explanation for the shrinking economy, the anticipation of these cuts?
Now, that's raising spin to a whole other level. There's no way that the possibility of shrinking the deficit is what caused the numbers to be weak. If we actually did shrink the deficit, if we actually did reduce government spending, that would be a net positive for the economy, because the government is draining the economy of the resources that it needs to grow. Unfortunately, we didn't get that. Government spending is going up. They've basically suspended the debt ceiling, so that's not going to restrain us anymore. They're going to cancel all these spending cuts. I'm afraid they're going to use the weak fourth quarter GDP as justification for canceling the spending cuts. And so the government's going to keep on spending. The Fed's going to keep on printing to monetize the growing deficits. And we are marching towards a real economic crisis in the United States, where the dollar is going to plunge, and that's going to send prices and interest rates in America soaring.
Peter, I want to ask you, I want to point out this other justification that the White House is using. The White House also blames Superstorm Sandy for shrinking the economy. Natural disasters, as we know, also are disastrous for the economy and also out of the government's hands, right?
Yeah, well, look, the government's going to blame everybody but themselves. Why doesn't the Obama administration take a look in the mirror if they want to know why the economy is struggling? And believe me, it's going to get a lot worse, because we still have all this money that we borrowed that we have to deal with. All we did during the Obama first term is spend more borrowed money. Now the bills are going to come due. We planted all these seeds of destruction that are going to germinate in the second term. Plus, we're actually going to have to start paying for Obamacare and other programs that were launched in his first term but are kicking in his second. So there are people that think that this is going to be where Obama can really write his legacy, because he doesn't have to deal with a bad economy anymore. He's going to be trying to fight off this recession, which is going to be worse than the one that he inherited.
Now, Peter, we only have about 30 seconds left. I do want to point this out, though, because it sounds like you have a very pessimistic view, a gloomy view of what's to come. I want to mention, though, that the stock market has surged more than 6% this year, breaking a record. Is this a good sign? In 15 seconds or less, unfortunately.
Well, no, Wall Street has a pretty good track record of getting it wrong. You know, the stock market was rallying right before the bottom dropped out in 2008. So the people that run money, major players on Wall Street and around the world, are really clueless with respect to the true financial position and the economic health of the United States. I don't doubt that they get it wrong. They typically do. But at the end of the day, stock prices might be going up, but it's only because money is losing value. It's because governments around the world are creating inflation and debasing their currencies. That's what's going on.
All right, Peter, I hate to cut you off there. We're out of time, unfortunately, but great to have you on. That was Peter Schiff, president of Euro Pacific Capital.